Hi, everybody. Good morning, good afternoon, good evening, and welcome to this webinar Unlocking Financial Inclusion, Harnessing AI and Blockchain for a Better Future. My name is Yekpun Gürgöz, and I'm the Learning and Insights Manager for the Swiss Capacity Building Facility, the SCBF. And I'm very happy to introduce you to Simplify, which is an app that lets you arrange loans back home. Simplify is on a mission to increase access to credit in developing markets. And today we will spend 30 minutes discussing with their CEO, Maurice. He is the co-founder of Simplify, the US-based fintech company that provides digital cross-border credit solutions for African diaspora. Prior to Simplify, Maurice was head of M&A in fintech investments at Baobab Group, leading the company's financial services acquisition strategy. And he began his financial services career in investment banking at JP Morgan in New York. Maurice, can you please tell us about Simplify's journey and evolution?
Absolutely. Thank you for the introduction, and happy to be here. So a little bit about our background and our evolution. So we started Simplify with the overarching mission of how do we better leverage capital in developed countries to unlock access to credit in emerging markets for productive uses. So our original model and thesis around Simplify was, can we leverage capital that the African diaspora is normally sending back to their home countries? Can we start leveraging that as digital collateral that can be used to secure and back loans for their family members that are doing businesses in their home countries? So the old philosophy and idea was about to be able to use cross-border capital without actually moving the money. So someone can park money in their Simplify account in the UK, for example, secure it as a digital collateral, and their family member in Nigeria can borrow against that from one of our banking partners to access much lower loans for business on an on-demand basis. And so we started with that business model, and we had some success with it. But as we started to think about how do we scale this business model, we realized that the bank partners that we were working with didn't have the tech capacity we needed to really scale the product to what we wanted it to be. And so we started experimenting ourselves, utilizing blockchain technology on how we can start lending into our own structures ourselves, to be basically the ones underwriting and lending in that solution. So you don't necessarily need the bank in the equation. And so that experiment, just for us just trying to test it, went really well. And we ended up doing over $1 million of transaction volume in a lending pilot that we were testing in Kenya. And that kind of snowballed into us realizing that there was a much bigger opportunity around us using innovative digital solutions to be able to lend to businesses in Africa for productive uses, as opposed to traditional banking methods of lending. And so that's where our focus has been the past 12 months.
Thank you so much. So what I hear from what you're saying is that the challenges that you encountered was really more with traditional lenders in this pilot phase. Can you explain how you addressed these challenges, and especially, how you landed in using blockchain technology? Can you give us a little bit more details about that?
Yeah, for us, our banking partners that we've worked with and piloted with have been great. They've been tremendous, and we were very appreciative for them taking a chance to work with us on this new product, because no one had ever done it. So we're very grateful for them. But we had a bigger vision on what we wanted to build. How we thought credit should work globally in general, and that vision was really centered around having a completely borderless way in which money and credit works around the world. Our vision was almost similar to Google, as in anyone in the world is able to push a button and get access to information through Google. And we thought money and credit should work that same way, for those who need it the most. And so we knew that banks didn't have the infrastructure, the technology infrastructure or resources to really follow us in that journey. And so, we made the decision that, look, if that's our ultimate vision and where we ultimately want our business and product to go to, we had to build that we had to build that world ourselves, and we had to build that infrastructure ourselves. And so, so that's why we started exploring how do we do it ourselves. The challenges that our bank partners faced was really around, their, brick and mortar businesses. It's just really tough for them to it's just really tough for them to have the resources and capacity to build technology solutions, because it gets complicated. It gets very complicated, and you have a lot of legacy, infrastructure, a lot of legacy human resources that becomes hard to pivot. And so we realized it's easier for us to just build that solution ourselves. So the opportunity that we saw around blockchain initially was around, how do we more efficiently secure and move money around the world. So, we had a vision that anyone in the world should be able to lend or provide collateral to anyone else in the world. And to do that, you needed money to be able to be fully digital and be able to move seamlessly across different countries. And that's one of the value propositions we saw around blockchain technologies, that it provided the rails and infrastructure to enable money to be, one, fully digitized, enabled us to be able to build smart contracts around our lending structures. So instead of you needing a lot of human intervention in a loan product, you can just basically have smart contracts that dictates if this happens, why, and that's fully controlled by the smart contract. And then you can easily move money across the world if needed, whether as a lender or if you're securing collateral. We thought those were transformative innovations that would help us better lend to businesses.
I see. Talking about infrastructure, I'm curious to hear your views on the African continent's position versus the rest of the world. How is artificial intelligence and how are blockchain technologies spreading in Africa? What is the positioning, so to say? How do you see the future?
Yeah, so we joke that we're not quite Web3, we're Web 2.5. We think that where blockchain technology is going to be extremely useful, I'll say the lowest hanging fruit about how blockchain technology is going to be really useful is about the movement of money. When you look at how the movement of money and USD stablecoins, I would say one around the movement of money is that with the traditional SWIFT rails, to be able to move money around the world, it's expensive, and it's a bit antiquated. And then when you're in Africa, those challenges are even heightened. So imagine if you're an SME business, and you need to buy goods, or you need to receive money. Trying to do that through Swift rails becomes super complicated, especially when you live in a country where your currency can't be used or transmitted outside of your borders. And so blockchain technology allows you to move out of those antiquated rails and to use a fully new infrastructure to be able to move money. So we think that's a huge opportunity. The second biggest opportunity we see around that is really the introduction of stable coins. And we look at stable coins, they're crypto, but it's just really a digital replication of the US dollar. And it goes back to what I was talking about earlier about how we saw the opportunity with technology, is that once you're able to, there's a lot of currency controls in African countries. And so with those currency controls, those central banks govern or restrict how people can access dollars. But with stable coins, what that allows you to do is now be able to access dollars digitally, peer to peer in a marketplace without the restrictions of without any restrictions. And so what that does is that it unlocks massive opportunities for businesses and individuals to be able to easily move money, be able to get access to dollars and move that around the world. Where that becomes super, super critical for Africa is that one, there's a lack of fiat US dollars in Africa. It's just difficult to get it. And two, most countries in Africa import most of their goods. Now, if you're importing most of your goods in Africa, you have to pay for those goods from foreign suppliers in US dollars. So what do you do when there is no US dollars? There is not enough US dollars for you to pay for those goods. You start having a lot of the issues that you're seeing in a lot of African nations around high inflation and high cost of goods, because this currency limitations makes it difficult for Africa to import the goods they need for people in their country. And so we believe stable coins can start helping solve and alleviate some of those challenges.
Incredible. Now let us dive into simplified business models. If you could maybe present us the core services that the company is providing, that would be super helpful.
Yeah, absolutely. So I would say, so our focus going forward is what we see the biggest opportunity for our business is really around supply chain financing to address some of the issues I just talked about, and specifically around inventory financing. We see a massive opportunity around what we've been doing the past year and a half, which is helping micro and SME businesses be able to access credit to purchase inventory from their suppliers. Now, this solves a number of key things that are important for us, which is one, we believe credit is transformative when it's used for productive uses. And so we wanted to hone in and figure out how we can provide access for verifiable business cases, right? That's one. And two, when we think about businesses and credit for businesses, one of the biggest, or primarily the biggest business market in Africa is just around trading, people buying goods and selling it. That's how most people feed their families and earn a living. And the biggest limitation these businesses have is that they don't have the same type of financial solutions and infrastructure in developed countries to be able to scale their businesses and scale what they're doing. So a simple way to explain it is that if I'm a small business in Kenya, for example, and I buy cooking oil and wheat for my store, and then I sell it. My ability to buy the inventory I need to sell is limited by how much cash I have at the time, and not the amount of demand I have from my customers. And so what we do around inventory financing is we now solve and unlock that opportunity for those small businesses to now start buying goods on credit, so they can start meeting the real demand of their business and their customers. So what that allows them to do is purchase more goods and to also better manage their cash flow for their business. So instead of me only buying 1,000 Kenyan shillings of goods, I can get access to credit from Simplified to buy 1,200 of goods, right? So now I'm able to sell more, increase my revenue, and grow my business. And Simplified, we provide a seamless, fully digital solution for businesses to get access to that credit without any paperwork, without any onerous requirements. We use transaction data of those businesses to be able to automatically qualify them for credit on our platform, and we don't disperse them the cash. We basically purchase the goods on their behalf from the supplier, and it gets delivered to them. They sell it and they pay us back, and then they can continuously transact at any time they need it. So no long-term loans and onerous loan requirements. It's a complete on-demand, use as you need solution.
Awesome. So if I understand correctly, you're now operating in Kenya, Rwanda, and Nigeria. You have different use cases, and you must be partnering with different institutions. Can you explain a little bit?
Yeah, absolutely. So, I mean, at the core of what we do is that we're an enabler in the financial system. So, for example, in Kenya, we're working with an e-commerce retailer that sells food services and delivery of those food products to micro and small restaurants in Kenya. So those restaurant owners can now, through a digital platform, purchase their inventory, their food inventory, for their restaurants, cook the food, and they sell it. They sell to their guests. And so what we're able to do is we're able to partner with that e-commerce platform, embed into their backend, and get the data we need on their restaurant owners to be able to provide those businesses instant access to inventory financing to be able to purchase their inventory and stock from that e-commerce from our e-commerce partner on credit. And so that's unlocked a lot of opportunities both for the end borrower, their ability to purchase more goods and earn more revenue, but it also unlocks a massive opportunity for our e-commerce partner, because what they're now able to do is we're helping them further digitize their platform and their offering, and we're also helping them increase their GMV and the amount of goods that they're selling. So we're not only helping the small business, we're also helping our digital platform, who's also a startup, to be able to scale their volumes and scale their product offerings with a fully digital solution.
Thanks. So you shared some of the positive impacts of your solution, the impact that it has had on SMEs in emerging markets. That's awesome. Can you discuss a little bit your future plans and potential expansion and new initiatives, if you have any?
Yeah, absolutely. So we're really excited about the opportunity around digital supply chain finance. We think when we look at the market opportunity around that, we believe that's a $600 billion plus opportunity. And there's no one really providing a fully digital solution for micro SME businesses in Africa, to solve some of the biggest pain points around supply chain financing, which is some of the products I've discussed that we're already starting to work on. And so our vision and our focus going forward is around scaling our product offerings around digital supply chain finance. So starting with inventory financing, looking to do invoice discounting for micro and SME businesses fully digital, and also those micro SME businesses that are buying from larger suppliers who are importing, to be able to utilize some of our blockchain infrastructure to be able to help them solve their cross-border payment solutions that they have around paying for goods from foreign suppliers that they're ultimately selling to the businesses that we're helping finance. So we believe there's a massive opportunity to solve a lot of pain points across the value chain utilizing our infrastructure.
I see. Thank you. Now, as the CEO of Simplify, of a growing company, let's say, what is your view on the need for patient capital? How donors, such as SCBF and others, helped you in your journey? And maybe if you could talk us about your current funding needs and also how much you would need to scale up operations.
Yeah. So SCB has been a tremendous partner for us, extremely supportive. They provided initial grant funding for us that was extremely instrumental in helping us further the pilots and test some of the use cases that we were building to a lot of success. So we're very grateful for the capital support that SCBF has provided. Where we see additional opportunities around organizations like SCBF supporting startups and businesses like ours is also around debt capital. It's hard for businesses, whether you're regardless of what vertical or your use case you're doing, it's hard for small businesses to access debt capital to scale credit-related businesses. And so what I'd love to see, and I'm sure other founders will love to see, is debt-like capital that can be provided to early stage startups that are providing credit related financial inclusions products to prove out, to be that early capital to prove out the model, which can unlock access to debt capital from larger institutional investors. I think the benefit of that is, for businesses, for capital providers in that model, is that you're in a position where you can get your capital back plus interest, plus a little bit of interest. And so we think that's a win-win solution for capital providers. Yes, we're currently raising. We're about to start a fundraising round. We're looking to do a small bridge round in the next couple of months of about a little bit less than 500,000 to further build out our solutions and scale our business to hit certain key milestones by Q4 next year.
Wishing you all the best on
Thank
this.
you.
Thank you, Maurice. And I encourage participants to stay engaged with Simplify's mission and innovations and learn more about the services, blockchain technology, and also financial inclusion. You can have a look at their website. It's simplify.finance, SYMPLIFI.finance. Again, thank you very much for attending. We are looking forward to the Financial Inclusion Week. And if you would like to learn more about SCBF, please also look at scbf.ch for more insight and knowledge pieces. Thank you and goodbye.